Hey guys, how is it going today? So today is now November 5th, and I wanted to start my tutorial video lesson number 2, which will go over candlestick formations in high detail. It's one of the most basic things in trading, but it's probably one of the most important things. Okay guys, before we get started, I wanted to actually give you guys a little bit of advice that my friend Randall gave me the first time. So take it from my friend Randall. If you don't understand them, you're just going to turn into a vandal. I'm going to teach you how to read these candlesticks. By the time we're done them, you're going to know how to manhandle them with tricks. What used to be incomplete and bittersweet. Let's light up these romance candles and turn the mood sweet. Let's sit back on the PC and eat me some good sausage meat. Hang out on the deck like a captain in Starfleet. Oh, Captain, that's going to happen. You're going to turn into an elite. Okay, guys, now that you guys have heard a little bit of wisdom from my friend Randall, let's talk about some candles so you can know how to manhandle them, okay, guys? Okay, so you guys see a lot of these candles, right? The one that I use specifically are candles. I don't use the hollow ones at all. I don't use, okay, first of all, let's go over here to see what kind of candles usually people can choose, right? You can choose bars, you can choose hollows, you can choose lines, baselines. Choose candles, guys. Candles they're basically like a story that they tell, okay? Sometimes I just look at candle formations all day to look for that one right candle that can give us a really strong indication of what is happening, okay? So when you first have a candle, like this one, for example, right? You have a body, sometimes you have a wick, for example, okay? And we're going to talk about how to actually read these candles first. So just for example, like that, okay? That is a candle there. Now, when you have it open, this is where it opens right here, okay? We don't like that line, do we? No, we don't, guys. We're going to choose that one right here, and we're going to choose another one right here, okay? So this is the body. They call this the body of the candle, okay? This is wherever the body starts, if it was a green candle, for example, okay, this is where I'm going to label it and draw it all out for you guys in real time as we do this, okay? So this is the opening of the candle, open, okay? That is the open of the candle right here. So for example, if the candle opened, we'll just say this one, for example, okay, at $2,700, then guess where the close would be, okay? Because it's green, we make its way upwards, upwards, upwards over here. And finally, that is where it ends up closing. Okay, close right here. Now, this is on the weekly chart for Bitcoin right here. And on the weekly chart for Bitcoin, it of course goes from Sunday to Sunday, right? That's when the open and the close is. But let's say you were on a 5-minute candle, then it would be on 5 minutes, it would be on 10 minutes, it would be on 15, etc., right? So you have a 5-minute time frame. And the candles actually tell a story of what is happening during that time of the candle, okay? So let's just pretend this was on a 5-minute time frame, okay? So on a 5-minute time frame, when we first opened, right, it would be pushing its way up, pushing its way up, pushing its way up right here, right? Actually, I'm going to delete this wick right here first. So it would push its way up all the way over here, but then it would actually push up all the way to this point right here, okay? This would be called the high. This would be called the high of the candle, okay? So the high of the candle basically indicates how high it got, right? But the reason why we see this gigantic wick here is because in the 5 minutes of the candle, we're just using 5 minutes as an example, okay? So it opened here, and then it bought all the way up and 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 up, all the way to right here, okay? But because there's only a wick showing and the body is right here. So let's say it happened within 3 minutes of the 5 minutes of the candle, right? So in the last 2 minutes of the candle close, what happens is there's bearish pressure where people are taking profit and then they push it all the way back down here, for example, in the last 2 minutes, right? And that's why we only see a body, for example, in this particular scenario, okay? Now, let's just say, for example, right, we had a wick right here. Now, this would be considered a low. I know that this is really basic for a lot of people, but a lot of people may not know this as well. So I wanted to help out the community and get it and make sure that people understand how to read candlestick formations properly, okay? So if we had a candle like this, for example, okay, when it's a green one, always choose the lowest point after it formed, right? And that's what you would call the open, okay? That is the open. So for example, if this was in a 5-minute candle, when it opened right here, let's say in the first minute, there were people selling and they pushed it all the way down over here. And that's why a wick will only show here. But let's say after a minute, people start buying it up to here again, okay? And in between where it opened and it closed will only have the body showing. And that's important to distinguish. So in the first minute, for example, there could have been people selling all the way down to here, but because the bulls pushed it all the way back up to at least where it opened, that's why there's only a wick showing. And then now let's say in the next 2 to 4 minutes of the 5-minute candle, okay, the bulls have pushed it all the way up here, all the way up to here, right? But in the last minute of the candle closing, the bears or people taking profit have basically just sold it back down to over here, okay? So here is where it closed, okay? So here's where it opens, and here's where it closes. Let's say this wick wasn't here, for example, okay? Let's say that wick didn't show over here. That's actually a really strong and powerful candle right here because the close is also equal to the high, okay? So in the first few minutes of the candle, they may have sold it all the way down here, and by the time in between the candle formation, they pushed it back up to here, and then they pushed it all the way back up to here, and by the time the candle finishes closing, it actually closes where the high also is, right? So let's take a look at another example, okay? Let's draw a bunch of candles so you guys understand them. Let's look at a red candle now, all right? Let's look at a red candle like this one, for example, okay? I'll draw it like this right here. And let's say we look at this one, okay? Do you guys think that that's a good candle or a bad candle? What do you guys think of it? Okay, we'll just keep it simple like that. This candle is a pretty bearish candle, okay? And the reason why is because, let's say it was a green candle, for example, you always count the body where it opened, okay? And where it closes where the green candle ends at the top. But here, for example, because it's a red candle, right, and we're going down, whereas a green candle goes up, now a red candle indicates that the open is now right here. So this is the open, and this is the close. I'm gonna drag it over to make it easy. So this is where it was closed, and this is where it opened, right? So if you actually look at this candle in particular, right? If this is where it opened, the bulls have tried to push it all the way up and all the way up and all the way up, right? But because it was pushed all the way back down by the end of the candle, that's why only a long wick shows, okay? And then by the time it actually closed, not only did it reach its original open position, but it actually closed all the way down over here, and the bears pushed it even lower. So let's think of the psychology behind this candle, for example, okay? The green one first. The psychology behind it is that when it opened right here, this is where it closed, right? When it opens right here, the bears have tried to push it down here, for example, and they tried really hard to push it down. But the reason why it's a powerful candle is because this long wick, when the bulls have pushed it all the way back up, not only did they reject the bears trying to sell and push it down, it rejected lots and lots of pressure to go down, but they completely destroyed the bears and actually ended up pushing it all the way back up. So imagine a tug of war, okay? A tug of war at the beginning where the bears are trying to pull it one way, but by the time the candle closes or near the end of the tug of war, right, the bulls have now regained control and pushed them all the way to their side. Does that make sense? Okay, now if we look at this scenario as well right here, this is where it closed and this is where it opened, okay? So let's think of this scenario for a tug of war. So during a tug of war, the bulls, okay, are on one side, and they tried really, really hard to push it all the way up there. But because they could not push it any higher, it ended up getting pushed all the way back down to not only its opening position, but then the bears have fully regained control and pushed it all the way back down, okay? So that's how we think of the market psychology behind the candle, and that's why it can really, really tell a story. Now, let's look at Bitcoin, for example, okay? Now that we have an average idea of what an open and a close is for the candle, right? So this would be the low of the candle, right? I'm just going to get my open and close here. So wherever the last wick or the body is, that's where the low of the candle is, right? That's where the low is right here at this point. So if you put your mouse, look over here, guys. Okay, look over here, for example. If I put my mouse on this one, you'll see that it opened right up here where my mouse is. And look here, and also look here. I'm going to zoom in really, really close so you guys can see it. So this is where it opened, okay? It opened at 42.33. Now the bulls have tried to push it all the way up with that little wick showing, and that's what shows in the high. The bulls pushed it to a high of $4,119, but by the end, well, during the candle formation, the bears have pushed it all the way down to a low, right here, okay, guys? Right here, a low of 3,490. But by the end of the candle close, the bulls actually pushed it all the way back up, okay? Right here. And that's why the next candle, that's where it opens, right here. So let's actually look at some real live candles of Bitcoin, okay? We want to look for a candle, for example, that can show market psychology of a really strong candle that will show resistance at some point, okay? For example, this candle right here, okay? Where did it open, guys? I'm going to put my mouse on here, and I'm going to ask you guys, where did it open? So look over here. Where did the candle open? Okay, so the candle opened at $5,597, right, guys? Now, during the formation of this candle right here, what the bulls tried to do was they tried to push it all the way down here, all the way down to over here, and it got to a low of that, guys. It got to a low of $5,114, right? But what happened during the candle formation and by the end of the close? So the bears tried really hard to push it down over here, but what happened was the bulls completely regained control, and they rejected the bears pushing it lower. Now, if the bears won, the candles would have looked like this, right? It would have looked like that, for example, maybe right here. It would have looked like that. So we opened up here to right here. And then the bears tried to push it down really, really low, right? Say to right over here. And then the bulls might have pushed it up only slightly. So the body of the candle itself would look much, much larger. But because the bears couldn't keep it down this low, the bulls actually pushed it up much, much higher. Much, 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 much higher, looking like that. And this is what we call a dragonfly doji. Dragonfly doji. And if we see this specific candle somewhere, for example here, right, it shows that the bears have tried to push it all the way down, but the bulls have completely regained control, right? So what that means is the bulls were rejected. So we can expect a stronger uptrend because the bears were rejected. And surely enough, what we actually end up seeing is a really strong uptrend for Bitcoin right here, where it actually peaked to a point of about 6,200 right here, okay? And there's lots of circumstantial situations where candlesticks are going to show a reversal. So do you guys get an idea again of what the opening and the close is? So I'm just going to draw a random candle again, just in between here. I'll draw lots of them, okay, guys? So let's say we had a candle like this one, for example, okay? A very small body, and then we had a long wick. We had a long wick through it, okay? A candle like this would actually indicate indecision and very good balance, okay? So because it's, say, red, this is going to be the open of the candle right here. Okay, that's the open. This is the high. So I'm just going to drag this one over so you can see it. Excuse all the other candles here. So this is the low of the candle, okay? That is the low of the candle. Right here would be what, guys? What would you guys call this one? I'm going to give you guys 5 seconds to answer while I actually annotate here. So this one would be the close, right? This one here would be the high. Sorry, this one is the high. This is the close. And this one right here is the open. So the way we read these candles is if it's red, the open is on the top and the close is on the bottom. If it's green, the open is on the bottom and the close is on the top. Okay, guys? Right there. And the high is always where the highest point of the wick is, and the low is always on the lowest point where the wick is. So once again, the low is where the lowest point in general, just in general, where the candle is, or where the wicks are, whether it's a body or just a wick. So if the body was down to over here, that's still the low, right? But now the close would actually be lower as well. The low and the close were actually in the same positions. But in this particular case, the low is in the lowest point where the candle is here, and the high is in the top point over here. Now on a green candle, once again, the open is always on the bottom of the candle, okay, guys? The bottom. And then the close is always where the high is over here, or where the body ends, okay? So once again, the open and the close are always where the bodies of the candle is. So we think of a red candle like this going down, okay? Just think of a red candle like that going down, okay? And because it's going down, you take the high point of your open and you take the low point of your close. And the highs and the low rules always stay the same. Now, let's say that this was green now, okay? Let's say that this was green. The opposite would apply because we're going upwards now, right, guys? The positions are swapped like that, okay? Makes sense? One more time? Okay, you guys want to hear this one more time. I know you guys do. Sometimes when things are said enough times, it seems to make a lot more sense, right? So whenever you're going up, if it's a green candle, just pretend that there's an invisible arrow pointing up and you're going from bottom to top, okay? So this is where the open is right there, right here of the body. So if you guys put your mouse, look right here, for example, okay? If it's a red candle, notice that the open, right, guys? The open is higher at 4,200 than the close of 4149.40, right? Notice that. So for example, here, I'll look on the top left over here, because it's green now, the open is actually 4367 and the close is 4400. So it's going from top to bottom, right? So that's how we read these numbers for open and close. And we're going to get into so much detail, guys. There's so much crazy shit that goes on in my head that just needs to get out. And I need to teach people how to do it properly, okay? So I love to read candlestick formations because candlestick formations tell a beautiful story of what's going on, okay? So I hope you guys have an idea of how to read this as well now. So let's say that this was red, okay? One more time. We're going to keep doing this until you guys understand it very thoroughly. If this was red, okay, the close is over here because we're now reading it from top to bottom. So that's the general idea of how to read this. Now let's look at a favorite coin of mine called EOS, okay? EOS. Is that how it's even pronounced? I have no idea. We're going to go to Bitfinex here. All right, guys. So, guys, what do you notice about this candle right here, for example, okay? This candle right here. Let's just talk about the market psychology, okay, guys? Let's go over each one of these candles, okay? This is what we call basically an accumulation phase or inside candles. I'm going to show you guys what an inside candle is. Ignore the color, whether they're red or green, right? Red or green doesn't matter for now. Actually, I'll make the next one green. This is what an inside candle is, okay? The bodies are getting smaller and smaller and smaller and smaller, right? And they're kind of consolidating within the same range, okay? Usually what happens when you get inside candles that are forming is a breakout is going to occur. I really wish that I looked at these earlier because the candles were getting so much smaller, right? And they were just consolidating, just waiting for a breakout, basically. And I should have bought into that, but I didn't. So these small candles tell a story as well, right? And the ones that get even smaller, right? Let's say you're on an uptrend and it keeps getting smaller and smaller. A breakout is definitely going to occur one way or the other. Now, let's look for this candle right here, okay? So if you guys notice, the open and the low was actually in the same spot, right? Right here. We're going to draw a lot of lines. The open and the close was in the exact same spot right here, which is a really strong and powerful candle because it indicates that the bears didn't even try. They didn't even try, and this is one of the most bullish candles that you can see. Now, I'm going to show you guys what this candle formation is. I know the majority of candle formations right here, okay? You guys ready? White soldiers. Yeah, 3 white soldiers, okay? It usually happens on a downtrend, right? You'll get something like 3 white soldiers going up like that, right? 3 white soldiers are basically 3 very, very strong bullish green candles that barely have any wick. Now, the opposite applies as well, where you have 3 black crows. And 3 black crows is a very strong downtrend, okay? So what do you guys notice here? Right here are basically 3 white soldiers that are forming here, okay? So this is a very strong bullish pressure. Now here, on this candle, on the daily chart for EOS, what we see right here, guys, what we see is that there's some indecision, right? Because now, where's the low? The low is always on the lowest point of the candle, okay? The lowest point, whether it's the body or the wick, it's the lowest point right there, okay? Right there, okay? Now the low, or sorry, the open of the candle is what, guys? Now, if we have a green candle like this, okay, we always think of it going upwards, right? Where we count it up, up. So just think of the open here and the close here, okay? So where's the open, guys? It opened right there, okay? Right here, right? And where did it close? It closed right here, right? It's going to draw closer so you guys see. And where's the high? The high is the highest point of the candle right there. So what does this tell us? It tells us that it opened right here. That's when the daily candle formed. But the bull, people took profit, basically, okay? People took profit as soon as this green candle formed. And that's why it moved down to this particular region right down here. I hope you guys can see that. So people took profit and they moved, the price moved down to over here. But because people took profit and we were still in a very bullish trend here, right? The bears were rejected. Now they moved back up to this line. Wherever it overlaps of bears and bulls, right? It doesn't show, guys, okay? The wick only shows if it got pushed down and pushed back up to the original spot of the candle. And only the body itself shows for open and closes, if that makes sense, okay? So for example, guys, this candle here, which I'll draw out roughly, right? It looks like this right here, right? Looks like that. And then, right? So, and we'll get back to it in 2 seconds. And here, it moved all the way up to here, right? To this point, actually all the way up to this point right here, right? It moved all the way up to this point. We're just going to draw this line right through it to make it more sense, right? And now the high and the close of the candle would have been the same if it closed at that specific time when the time ran out for the daily. But because they couldn't maintain that and people took profit, or, you know, bears, for example, they pushed it back down, right? That's why we see a green wick showing up there, okay? So the market psychology behind this candle is that, you know, it got pushed down by the bears here, right? But the bulls successfully gained control and they pushed it all the way up to here, all the way up to here. But what ended up happening was more people took profit, bears took control a little bit, and they pushed it back down to where the candle eventually closed. So this is the low, this is the high, this is the candle opening, and this is the candle closing, okay? So wherever the candle closes, which is right here, is where the next candle ends up beginning, right? So notice that in this candle right here, it closed right here. So the next candle's open would actually be on the same point there. And we'll get into gaps and stuff later like that as well, okay? What do you guys notice about this candle right here, okay? Where's the open? You guys got it right if you said right here. This is the open because the previous candle closed right there. So where the previous candle closed, the new one, the next candle opens right here. Now people took profit again, right guys? People took profit again. What happened was as soon as this candle opened, the bulls, or just people, we'll just call them the bears, okay? Whether it's people taking profit or whatever, we'll call them the bears. The bears tried to push it down to over here, okay? So the bears tried to push it down to over here, and this is called the low. Okay, but what happened was the bears were rejected so freaking hard, guys. They were rejected so hard that not only were they rejected, but now the bulls successfully gained control, pushing it to all the way there. Now, if we got a candle like this in the previous one, for example, right here, okay, guys, if we got this kind of candle again, what that means is the bulls pushed it to the top, but the bears ended up pushing it back down. It's not nearly as a powerful candle because it says basically, right? Okay, the bulls, they tried to sell it off. The bears, for a tug of war, for example, the bears lost the fight. The bulls took control again and they pushed it all the way up to here. But now the bears, they took control over a little bit again and pushed it down here, right? Now the next candle that formed, right, was basically like this. If we can see it in real time, it would have looked like this. So first of all, the bears pushed it all the way down here and it would have actually been a nasty red candle like that for a little bit during the day. It would have looked exactly like this actually. My bad. It would have looked like this first, right? Just for this bottom part here. But now what ended up happening was, right? Now what ended up happening was they pushed it all the way back up to here and it would have shown nothing actually. The open, the close, and the high would have been in the exact same spot if it finished like that. But because the bulls took over and they pushed it all the way to the top, guys, and now it became a huge green candle, well, the bears have officially lost. They have entirely given up. And because they've given up, guys, look what happened the next day. Okay? Look what happened the next day. So that is how we tell a story. When this one formed, sure, some people took profit. But what ended up happening was this ended up becoming the high up here, okay? This ended up becoming the low. This is the open, right? Open right here. And this is where it closed, right over here. So during this candle, for example, we'll talk about what happened. Remember I mentioned that it always opens where the previous candle closes. And what you want, guys, you always want to have a higher low. So for example, if this is the low right here, and this is the next low, you always want to have a higher low in order to consider it to be an uptrend. And you also want to always have a higher high. So if this right here, if this candle down here was the high, well, because this candle got a higher high, it's a really, really good signal still that it's a good bullish uptrend, right? So we're going to go back to this big candle here and talk about what happened. Let's talk about the story behind it. This candle formed and it's a really, really strong candle. So people, as soon as it closed, some people took some profit, right? And then we got this low over here, but now this is the open and they pushed it all the way up to there. And we're going to draw that candle out right here. We're going to draw that candle out. They pushed it all the way up to here, okay? Just like that, right? Bears lost the fight. Bulls pushed it all the way up, way over here. But by the end of the candle close, by the end of the day, people took profit. People took profit. Bears won. People took profit. And then we moved down to low level like that. And that's why we see a big candle, because the bulls have tried to push it all the way up, but they lost right there because people were taking profit, okay? And that's why these long wicks only show. Now, is it still a strong candle? Yeah, it's actually still a very strong candle because one, we follow this rule right here, okay, for it to be considered an uptrend still. One, it has a higher low or higher close, and two, and higher close. Yeah, we'll write that, okay? Basically higher low, and we have a higher close, sorry, and higher high. That's what I meant to say. Higher high. There we go. So whenever it closes, it needs to close higher for both of them, okay? You got to have a higher low and a higher high. Now, is this one here, does it have a higher low for rule number one? Rule number one is it has to have a higher low than the previous candle. Absolutely it does, right? It's got a higher low. Does it have a rule number two? Does it have a higher high? Absolutely it does, okay? Absolutely it's got a higher high. Although we have this long rejection, it's basically people taking profit. Now, we take a look at the next candle that's formed, okay? We take a look at the next candle that's formed. Here, people took profit, right? As soon as this one finished, the next day, people took profit, right? But the bulls successfully regained control, right? Moving it all the way back up to where it at least opened, and the bulls pushed it all the way up to this point over here. And because the really long because the long wick is showing, it shows that the bears have successfully pushed it all the way back down, okay? So we think of the story that everything is telling, okay? We think of this one, it's got a lot of strength, lots of strength. This one's got a lot of strength too, right? Here, people finally took profit a little bit, but the bulls said, no, not today. And they pushed it all the way back up. Here, it becomes an even stronger candle. The bulls have pushed it all the way back up. But now people are getting greedy, right? There's too many people that are pushing up there with it. So now the bears decide to take some profit, push it back down. Here, people took even more profit, right? And now there's a big struggle because the body of the candle is actually really, really small here, right? Compared to all these other ones. We know that there's some indecision happening in the market right now where people are really debating about, hey, should I buy into the strength, right? Should I keep going with the market or not, etc.? Or should I just take my profit and be happy with it? Should I be shorting the market as well? So this one shows a little bit more indecision. But because the body itself is in between the wick of the candle pretty much, right? You guys notice the body is very much so in the middle. It still implies it's a pretty good uptrend actually, okay? It implies that it's a good uptrend. Now the next one that forms, okay, people are taking profit. The bears have pushed it down, but then the bulls, they pushed it all the way back up there, all the way back up. But by the end of the candle close, right, it gets pushed back down far. Not only does it get pushed down far, but it gets pushed down past the middle of where the candlestick is. And what we call these candles, guys, okay? If, for example, this one here was called a hammer, okay? This is basically a hammer, we can call it, with a long wick shooting down like that, okay? This is a hammer, and this is a very strong reversal candle. If you guys ever see a downtrend, a heavy downtrend, and then you see this candle, what it implies is the bears have tried to push it all the way down to over here. And if they did push it all the way down, it would actually look like this, okay? If this was where the open was, and they pushed it all the way down, this candle would be a massive red candle, like that, okay? It wouldn't show big, it would just call it big body. But because the bulls have successfully regained control, and they pushed it all the way back up here, for example, right? And let's say they pushed it a little bit higher, because it pushed higher, because now we're going upwards, right? Like I mentioned that when we go up, we think of going from bottom to top. And when we go down, we think of going from top to bottom. But now because, guys, the bulls have regained control, and not only did they reject a huge bearish pressure, but now because we have a huge long wick, and the bulls successfully moved it all the way back up to where the opening was, they actually pushed it even higher. So when you think of the psychology behind that, like in a tug of war, the bears tried really hard. In fact, they almost won. But by the end of the tug of war, right, the other team pushed it all the way back up, not only to where the middle was, but all the way back to their side. So that market psychology is really important to understand, right? But let's say, for example, the opposite applies. So this is called a hammer, okay? This is called a hammer. And it's a really strong reversal candle. If you see it in a downtrend and you see this candle, I promise you guys that this is going to be an amazing candle for an uptrend, okay? Super good candle. But now let's say we see an uptrend. We see an uptrend and we see it the opposite way, okay, guys? The opposite way, okay? Even though it's green still, it's still a really good green candle. So the open was right here, okay? And the bulls tried to push it all the way up to the top. But by the time the candle closed, the bears pushed it down to higher than the candle, okay? Higher than where it opened. Now, that's still a very bearish candle. Don't get candles confused. Just because it's red does not mean that it's bearish. Just because it's green does not mean that it's bullish. This is a bearish candle regardless of how you look at it because of the market psychology. And basically the market psychology says, guys, the bulls tried to push it all the way to the top, but they got rejected and the bears pushed it back down. Now, because it's green here still, it means it did not push lower than where the actual open of the candle was, okay? So the open is right here and the close is right here. So it's still bearish, but it's not as bearish as this candle. If the bulls or the bears actually pushed it down lower than where it opened, then what would happen is this would be a red candle. And this, guys, is no longer a hammer. This is called an inverted hammer. Inverted hammers are a very, very powerful thing. Okay, guys, give me 1 second. I'll be right back. Okay, I'm back, guys. All right, so now we're starting to understand market psychology and candles a little bit more. Let's think of this candle right here, this big green one, okay? So once again, the bulls are definitely have won this one, okay? So the open is right here. The bears have tried to push it down to over here, right? But in between the candles somewhere, the bulls have pushed it all the way back up over here. And they actually got it some really, really high, super high. But what ended up happening was the bears ended up pushing it all the way back down to over here. And this, guys, is actually called an inverted hammer. And under is a really powerful reversal candle, okay? For example, on an uptrend, right here, okay? Let's say we keep going up. This is not a shooting star. That's wrong. We'll get into shooting stars, okay? This is a hammer that goes all the way up, right? But the bulls were rejected and the bears pushed it back down, okay? So this is called an inverted hammer, basically, okay? So the market psychology behind that is really powerful. Even though it's green, because we saw this candle form, we can automatically assume, guys, that the next candle will be red. And we can also see, for example, to add in different strategies into it, we can see that the volume is really, really declining, okay? Now for the next candle, what do we see? What do we see? Actually, let's go to a 4-hour chart, okay? Let's go to a 4-hour chart. Let's take a look at, for example, where we are right now, okay? Here we got basically a hammer, right? Even though it's red, it means that the open was right here. Now the bears pushed it all the way down to over here, okay? They pushed it down to all the way here, but then the bulls regained control and they pushed it up to about right here. Now, if it was slightly higher and they pushed it above where it opened, then it would be green. But because they only pushed it to slightly below it, it was red. But this candle right here actually indicated a pretty strong, really, really strong actually support, okay? So because it indicated a lot of support and it closed right here, this is where the open is right here. So the open, during the opening, the bears have tried to push it down to over here. Bulls regained control, pushed it all the way back up to where it opened. And not only did they open or push it back up to where it opened, but they pushed it all the way back up right there, creating a really freaking strong hammer, right? And here, it's not that strong of an uptrend. This one is more of an indecision candle. Whenever we see candles like this, for example, okay, small body, okay, small body, whether it's green or red, okay, and a longer wick, it shows an indecision candle, okay? If this right here was more to the bottom, it still shows indecision, right? Like relative to the size of the wick, okay? It shows that this is slightly more bearish, right? But if it was a little bit higher here, it would show it as slightly more bullish, okay? Now we're gonna go over some candlestick patterns, okay? So one of my favorite candlestick formations to form is, for example, this one right here, okay? This is a doji, okay, guys? This is a doji right here, and dojis always imply indecision, right? But when you see these types of inside candles forming, for example, if it was on a downtrend, right? If it was like on a downtrend and you see lots of indecision candles like this, chances are it's going to end up consolidating somehow and get a really good breakout soon. So doji candles are just super small candles with a very small body. And they're some of my favorite candles because they indicate a lot. If you see a doji, for example, like this candle here is not a nice candle, right? Not a nice candle at all. So at the end of the uptrend, for example, this candle here, the bulls have finally tried to make one last attempt to push it all the way up, but because it was pushed down to over here, we can imply, or we can assume that it's going to be a heavy downtrend, okay? So this is a doji candle. If you see it on an uptrend like that, and you see a doji candle finally, it's going to indicate a reversal to the downside eventually, okay? Very close. And now, if you see it on a downtrend, and you see this doji candle, chances are there's going to be a lot of indecision in the market, and now the bears are done. So what they're going to do is it's going to be a reversal candle. So there's a lot of reversal candles. Let's get into some reversal candles actually, okay? Let's say you're going on an uptrend, okay? On an uptrend, okay? Uptrend like that. This right here would be called a shooting star, where you have a small body and you have a long wick poking up, okay? This is a shooting star because it implies that the open, especially if it was red, the open was right here, okay? The bulls have tried really hard to push it all the way up, but by the end of the close, not only did the bulls lose and the bears pushed it all the way back down here, but they actually pushed it lower than the open itself, okay? This is for an uptrend. Now, another indecision candle could be something like a doji right here as well, okay? That could be a doji right here, where you have a body just going through it like that, okay? That could be an indecision. That indecision on an uptrend with candles like that will 100% imply that they're reversal candles, okay? So where else can we see something? Nothing here right now. We'll get into a lot of candles on different charts, no worries. This is going to be an incredibly long video, guys, because we want to be thorough. So regardless if you guys watch all of it or not, you're still going to be learning a lot from it. Okay, guys, just to change up the pace a little bit, I actually diverted my attention to EOS right now because that's also what I'm trading right now. I've made I think 4 successful, really good scalps already, ranging from anywhere between 3 cents to 10 cents per scalp, right? But just to talk about some topics while we're also doing this candlestick formation video is that like scalps really add up, guys. They really add up right now. And if you think of, let's say you made 4 scalps a day and they total the difference of say 15 cents, just as an example. Well, if you played, I don't know, $2,000 and you played 15 cents, that's like a $300 profit, guys, just to give you an idea, right? So just to give you an example, let's say you play $2,000 total for the day, right? And you made 15 cents on a total combined. That's like $300. The money really adds up when you scalp, okay? So the reason why I diverted my attention to EOS is to give you guys the perfect example of, first of all, let's say you drew your trend line right here, okay, to get your resistance. And this candle right here is called an inverted hammer that we've been talking about already to give you a live video, okay? An inverted hammer basically means that it tries to break above the resistance, but it was rejected, right? So the open was right here, okay? The open is right here, because the open on a red candle always goes from top to bottom, and the open on a green candle always goes from the bottom to the top. So this one right here, for example, the open would be right here, and it closed right here. And then on the next candle, the open is pretty much on the same line or same price range, and then the open is right here. So the bulls attempted to break the resistance, right? This is the resistance line that we draw right over here. And then the bulls attempted to break it. But not only did they attempt to break it, but they failed miserably as well. So what ended up happening here now is that the bears pushed it all the way back down. But not only did they push it down to where the candle opened, but the candle was actually, the bears, they pushed it all the way back down to right over here. And now the open is a little bit higher right here because there was a spread difference in between the candle formations. And now the bears are actually pushing it really down already. So if you actually confirm this uptrend right here, there's no doubt confirming that this is an uptrend. It was a beautiful one from 107 all the way to 1715 about, okay? The nice candle confirmation here by the volume, right? Goes up. But now the bears, they successfully won, and the volume for an uptrend is actually slowly getting less, right? If we look at it over time, for example, on a higher time frame, just to diverge into different topics at the same time, like that, okay? And now if we look at the 2-hour time frame, right? So the 1-hour one right here, we saw this inverted hammer already, okay? We saw this inverted hammer. And if we look on the 2-hour one, right, it's like they're fighting really hard right now. And it's going to be an even bigger inverted hammer, which just looks nasty. I expect a small bounce, of course, off of the 55 EMA, and then we'll probably test the resistance again. And once it gets rejected enough times, it ends up down ticking. So what else can we look at candlestick formations? For example, on a 30-minute chart, right? We were talking about candles like this earlier, whether it's green or red, and then we have a big wick through it, just like this, okay? Just like that. Right? This is called a doji candle. Okay, with it can have a long wick, but on an uptrend, if we see a doji candle like this, it can pretty much confirm already a downtrend, right? It's a reversal because now the bulls and the bears are fighting. This implies an indecision in the market, but because they tried to break it up past the resistance point, but they couldn't, the bears took over and they pushed it down. So in situations like that, you can absolutely consider it a down or an uptrend, right? So let's see if we can find some other candles as well. So for example, this one, okay? This one right here, right? This indecision candle started to form and it was clearly downtrending right here. But what ended up happening was when this doji candle formed here, it broke that downtrend right there. And then you end up going upwards. Hey, look at this inverted hammer right here, okay? This is an inverted hammer where the bulls tried to push it up, right? They were struggling above the resistance line, and it's just hovering here, right? And in the next lesson, we're actually going to talk about moving averages in my video 2, because moving averages, when you combine it with candlestick formations, you can actually use one specific strategy that can be very profitable over time. And I'm going to get to in the next video how we combine moving averages with the EMA to confirm a downtrend or an uptrend. But just to give you guys a little bit of a taste, okay? For example, I don't know, we can look at it right here, okay? We can look at it right here where, and I'll talk about it in great detail right now, actually. So we're not great detail, but just enough, okay? So what we want on a 55 moving average is we want it to bounce off of there, okay? Here, you don't really want to play this one because what you want, guys, is you want a wick to poke through the 55 EMA, okay? To poke through the 55 EMA. And then the next candle afterwards, you want a candle that closes successfully above it, okay? If you notice right here, just as an example on a downtrend, on this candle right here, okay? They attempted to break it upwards, the bears, or sorry, the bulls, but it was rejected, and it actually ended up just closing below it, right? But that's not enough of a confirmation. What you want is it to have this exact candle on a downtrend, and then the next one after has to successfully close below it. But that didn't happen, so it wouldn't be a signal for a downtrend. But for this candle right here, even though it's red, it actually successfully closed above the 55 EMA, right? The wick pokes through it, which is what we want. The bears attempt to push it down, but the bulls push it up. And now what we want is, like my same rule, is the next candle to successfully close above the 55 EMA. So those are the two criteria that's important. One is a rejection to the downside, right? And then 2, the candle up next that closes after it ends up successfully closing above the 55 EMA. And when you follow these simple rules that I'll get into so much detail for you guys, I promise, right? We can now confirm an uptrend as you guys saw right here, okay? So right now, just watching it live, right here, even though it didn't reach the 55 EMA yet, but if this candle ends up coming, for example, right here, okay, let's say it ended up just doing like this, okay, so now the bears have taken control of it. You get an inverted hammer, and the bulls have tried to push it above the 55 EMA, and then the bulls failed, right? So now we have this candle here. So the next candle that forms, if it closes successfully below this 55 EMA, right? Let's just assume it goes like that. If it successfully closes above the 55 EMA, then trust me, a lot of people are going to rally into a short position and they'll be selling and just selling and selling. But the most important thing to take away basically from this video series is that just some small simple candles like this one. This is an inverted hammer, or sorry, this is a hammer, right? On a downtrend, 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 we get this candle on a 30-minute chart right there. The bulls have successfully won. Inverted hammer implies that the bears have tried to push it down right here, but the bulls have pushed it up and up and up, right? To the point where it was completely rejecting the bears. And that's how you can confirm an uptrend. Let's go see if we can see some more candles on a 30-minute chart that can confirm it. Right here is just pure uptrend, guys, pure rally. And it was just hovering above the 55 EMA, hovering above it. Let's see if we can find one. This one was a good example that I talked about earlier, right? Really good example. Look at this inverted hammer right here in the 30-minute chart, guys. The inverted hammer on the 30-minute chart for EOS implies that the bulls have successfully lost. Or sorry, the bears have successfully won and the bulls have officially lost. So what ended up happening here was that the bulls tried to push it really, 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 really high up, but by the end of the candle close within the 30-minute time frame, they lost pretty badly. And what happened was it was rejected and pushed all the way down over here, okay? And now the bulls are trying to fight. There's some indecision, but this candle alone probably would have been enough of a confirmation for me to enter a short position, right? Even though it wasn't a big short position, but it's still nevertheless a good price range, I'm guessing. So as soon as this candle formed, no matter what, I would have entered a short position for sure. And I would have gained myself a 20% profit, right? And I would have targeted the 55 EMA. Always target the 55 EMA, okay? So just looking at this right here. So do you guys notice what I'm saying here? That here we rejected that line right here, okay? We rejected entirely the EMA, and people notice these things. And even if they don't know it, it's just market psychology as well. So the bulls tried to push it up, but the bears won by pushing it down. And because the bulls could not break it above the 55 EMA, it all tells a gigantic story. And the story says the bulls tried and the bulls failed, and they're not really trying again. They tried slightly right here, but it wasn't really that much of an attempt. And now we're down ticking pretty hard. I got into a pretty lovely short position from right up here because I assumed that it wouldn't break it. And then right away, I put a limit order for 113, and they closed within 5 minutes. And I made a 4-cent scalp on a few thousand coins, which is monstrous if you think about it, right? And because I didn't want to test again, right? I wanted this confirmation candle to form. I entered another short position as soon as this one formed. I entered it at 113 about, and now we're already at 110, which is a 3-cent profit, guys. That's a huge profit, okay? They just do the math on, say, 2,000 coins on the 3-cent profit. That's $60 right there. You keep doing it enough times, and I guarantee you're going to make a lot of money. And I'm not really sure what else I can be talking about in this video. And I'll be adding a lot of different candlestick formations down the road to my videos. Okay, here's a really good example, all right? This is ETP that has just formed, right? This one here is called an inverted hammer. Inverted hammer. So the market psychology is this, okay? The bulls attempted to push it past the 55 EMA, but was rejected by the bears, shown by the long wick. Okay? Look at this guy right here. And I actually just did an OmiziGo analysis, and I was referring to ETP as kind of a rough guideline of how they're very similar, and with a similarity index that's very high right now. And this one here is what we call an inverted hammer. And the logic behind this hammer is that the bulls tried really hard. Remember I was talking about EMA before, where it pushes above the EMA, right? But it was completely rejected by the bears, pushing it all the way down to here, right? So it opened here. And basically what happened was the bulls tried really hard once again to push it really high up there, but they were rejected by the EMA there. And then the bears pushed it all the way back down to over here. And by the end of the candle close, it actually just closed right there. And during my OmiziGo video, I paused the recording and I entered a short trade because I just noticed this candle forming. So I was pretty excited. So usually what happens is if you enter or if you see this candle forming, right, as soon as it closes, even if you caught it a little late, that's okay. Because it implies that in the next few hours, there's going to be a downtrend, okay? So I entered a short position, right, with a stop loss basically slightly higher than where the candle opened on the previous one. And then I'm going to go target basically another bottom. So I'm hoping to gain about a 7% gain, which is pretty big, right? And my risk to reward ratio is 3.72. Now, where else can we notice a candle like that, okay? For example, here, okay, on ETP, this one here is called a dragonfly doji. This one right here. And the market psychology behind it is that the same thing, basically the exact same thing. So I'm just going to drag this one over to show you guys it, except it's called a dragonfly doji. Okay. So with the dragonfly doji, the bulls attempted to push it past the 55 EMA, but was rejected by the bears, shown by a really long wick. Now this very, very small body is actually just as powerful, okay? Just as powerful, and you would have entered a short position here as well, right? You would have entered a short position there, and you guys would have held strong, right? And you would have targeted, say, the next support point. So let's say you entered a short position there when it formed, right? you can keep it maybe right over here, and you can target the next support point down over here. And that would have been a 3.79 risk to reward ratio with a possible 18% gain. So when we look for these candles that have formed, even if you guys are just candlestick trading, right, there's a lot of candles that will form that can show you indecision in the market. For example, this one right here, even though it is green, don't worry about it, okay? Just because it's green doesn't mean that it's bullish. Just because it's red doesn't mean it's bearish. It's very circumstantial on the point. So let's say you're trading on a 2-hour time frame there. On a 2-hour time frame, if you see this kind of candle right here, where same psychology, the bears won in the end. The bulls tried to push it up, actually twice they tried, with one hammer candle there and another hammer candle there, right? So the bulls tried to push it up really high, but was rejected by the bears twice, 2 candles. So what you would have done is entered a position, say around here, right? As soon as this candle formed, actually, you would have entered a position, say right here. You would have set your stop loss slightly higher than that, and your next target could have basically been even down here to where the next support point is. And let's see if it actually reaches it. And you guys would hold strong, right, until you wait for a huge confirmation on the uptrend. Okay, you guys could have closed your position there, maybe. If not, you could have just kept holding for hours and hours and hours. And surely enough, right, it ends up hitting where the previous resistance was over the next few days. So you guys would have made 41% gain if you entered that trade there. So what we're trying to do is look for candles that can confirm an entry or an exit, all right? Once we confirm an entry or an exit, there's a high probability or increases the probability of us being successful with our trade. Let's look at Omise Go 2-hour, for example, okay? This is Omise Go 2-hour. Let's look for a candle like an inverted hammer, okay? Look at this guy right here. This is an inverted candle again, where the bulls tried to push it really high up, but it was clearly rejected, and the bears pushed it all the way back down to over here, okay? And for example, a good rule of thumb is, we'll get into moving averages in the next videos, it cannot stretch too far away from this yellow line, okay? Think of an elastic band. An elastic band, once stretched, it usually snaps back to its original position, right? So if you entered a short trade after this hammer candle formed, right, you guys could have targeted the next support point almost, or you could have even targeted right here where the 55 EMA is, and here you would have made yourself a nice 28% gain. That's huge. So now let's look for it on a downtrend, okay? Where can we notice something on a downtrend that shows indecision that will confirm a reversal base? Let's look on, for example, a daily chart. We'll just scan through it on Omise Go and see if we can confirm anything. This one right here, really strong candle right there. This is a strong candle because on a downtrend, right? Clearly it's downtrending the zigzag there, right? And we were also getting higher highs, which trend line analysis will be saved for another day. But because we were getting higher highs right here, on a downtrend with a higher high, this candle right here would have confirmed an uptrend. So what you could have done was you could have gone into a long position right here, okay? Long position, you would have set your stop loss slightly lower than the resistance line, and you would have at least made a target to the 55 EMA right here. And surely enough, you know, it hits it, and you would have gained yourself a nice 135% gain actually in the next few days, which is kind of phenomenal, right? If you think of it that way. And this is on the daily chart, by the way, for Omi. Oh, sorry, I'm looking at the complete wrong coin. My mistake entirely. But the same concept applies. Let's go to, there you go, Bitfinex. I was wondering why my chart looks so weird. Right here, this one here, I'll just delete this so you guys can see it. This candle right there, okay, I think we went over this one already. On a downtrend, there was an indecision candle, and it was green, and the body was actually in the middle of it. So that can confirm a rejection as well to the bears. Now look at this one too, for example. This one is really strong candle, okay? This one here is basically a dragonfly doji. This one right there on top of the Y. A dragonfly doji confirms on a downtrend that it is a very strong candle. And this candle right here on a downtrend, if you guys see it, the bears attempt to push it all the way down, but what ends up happening is it was rejected by the bulls, right? And since it was rejected, the market psychology speaks really strongly. And right here, it was rejected as well, right? So now we know that a big uptrend is about to happen. So for example, this candle here on a downtrend, we first get what this is called 3 black crows, okay? 3 black crows is basically 3 large candles with a very small wick poking through it. Not a big wick, just small ones, but large bodies. When you have 3 black crows coming down, usually what happens is you'll get a green one, okay? But because this one here is basically same length right there, okay? And the body is inside of it, we can assume that it's going to be a reversal candle. Now look at this one right here, okay? On an uptrend, do you guys remember what this one's called? This one is called an inverted hammer, okay? And the market psychology says that they tried really, really hard to push it up, the bulls, but it was completely rejected and it was pushed back down here, okay? So because it was on an uptrend, right, on an uptrend, and because we have this one candle that confirms that they failed miserably, the bulls, and after that happens, you can absolutely enter yourself a short position and just ride it all the way down there to where the supports are. Let's see what else we can look at here. See this one here, even though it's red, okay? Even though this one right here is red, that's okay, because it's still a hammer. So red candles don't mean that they're bearish, guys. The market psychology speaks for itself. It opened right here, okay? Or sorry, open actually here, right? Because we're going from top to bottom on a red candle. So we're going from top to bottom. This is where it opened, right? The bears tried to push it all the way down, all the way down, all the way down, but the bulls successfully pushed it back up. Even though it didn't, if it got higher to over here, then it would have been a green candle, right? Because then you're going from bottom to top. But because we're still going from top to bottom here, that's why it looks like a red candle. But these are basically lots of rejection candles in general. Here's another rejection candle right there, up to the downside, right? This is a small dragonfly doji, you can call it. This dragonfly doji right here, the bulls have successfully won. The bears tried to push it down and down and down and down and down, but then the bulls regained control by the end of the candle, pushing it back up. So we knew that the bearish pressure was very weak and the bullish pressure was very strong. Okay, so market psychology is super important. Let's see if we can do it on a lower time frame as well, right? Let's look over here and we're going to see where were some signals for us to short this guy. So for example, this is a good hammer inverted candle right here. We're going on an uptrend. We get one long wick that rejects it, right? Comes back down here. And then the next candle that formed, huge long wick. This is basically a hammer, but it's not really a hammer, but it's a big rejection. But based on the 3 uptrends right here and this long wick poking out of it, we can assume that the next candle will be an uptrend. So we always think of wicks as one side trying to push it one way, but the other side ends up winning because it shows a long wick, okay? So where else? Where could you have entered a trade right here? Okay, guys, this is a candle that confirms that it's probably not going to go anywhere higher. So I would have entered a short position probably right here. So we can look at candles all day, guys, and honestly, we can trade off of pure candles alone, and we can make a lot of money doing that. So where would we have targeted? Well, we probably would have targeted, well, we would have just set a stop loss right above the 55 EMA, okay? And then we would have probably just targeted somewhere where the next resistance was even, pretty far away. Actually, this one you wouldn't have really had a target. Yeah, definitely wouldn't have really had a target there. But you would basically ride that one down to as low as possibly gets until you can confirm a volume confirmation. That's what I would have done. I would have rolled this all the way down to where I got some nasty candles and it would have shown some support. So this candle would have been a really good place to close it, or this one right here. Okay, so you're looking, sometimes you don't know where your targets are, but most of the time you do know that where your stop loss is. And the stop loss after this candle, I would have gladly, or this candle rather, I would have gladly placed it above the 55 EMA. And above the 55 EMA is a great place to always place it for the short term, right? And then you ride it down until you get spikes of volume. Notice right here, you're getting a spike in volume. Here you're getting a bigger spike. Here equal, here a really big spike. That's how you know 100% with certainty that there's now support. So if you guys entered that trade, you would have made yourself 20%. And you guys would be blown away, you know, if you guys saw some of the trades that I actually make, and just by using this simple logic, right, and how profitable it can be, right? And I showed you guys my scalping video series, right? Started with $200, and then with $200, I turned it to $1,600 in 16 days, and that's just using one of my millions of, not millions, but one of my dozens of strategies that I have. And this is one strategy that when I was a more beginner level, you can say, when I like 2-3 years ago, I started using the strategy first. And I got to be really good, super good, just by reading candles because they tell a story, right? And then after that, I started to learn about moving averages about 2 years ago, and I incorporated moving averages into my candlestick pattern. And then after that, I started to learn a lot about RSI and a lot about MACD, right? And a lot about patterns after that. And then I learned about risk to reward ratios and risk management and probability trading in general. And then I dabbled into things like Dow theory and then Wyckoff theory, Wolf theory, and eventually I started learning a lot about Elliott wave. And I'm about 8 months into Elliott wave theory now, and I'm on my, geez, how many books now? 7 or 8 books, and they're all up to 300 pages each. But what I'm getting to you is we have to learn the basics first, okay, guys? Once we learn the basics, which is candlestick recognition, we can easily find out exactly when to enter a position. So let's take a look at these candles, guys. Do you guys notice more candles down or up in this position right here? So answer it out loud with me, guys. Do you guys in this area, do you notice more candles poking upwards or downwards? Or would you say they're equal? So we hear down, 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 right? But here we have up, 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 and big up, right? But basically what this 55 moving average is it's a resistance, right? It's a resistance taken from a measure of averages of the previous candles forming, and that's how these lines are formed. But what we notice is that it constantly makes an attempt to break the resistance, rejected, makes an attempt again, rejected, makes an attempt again, rejected. These ones couldn't even get close. And then the final one that was rejected is this bad boy right here. This one right there. Do you guys see it? This one right here. This is the Dragonfly Doji that will have 100% confirmed the short position right there to enter, okay? This one would have definitely confirmed it. Even more confirmation. This one from me would have confirmed it first, but if you guys want even more confirmation, just wait a little bit and just write it down after you see this doji. So what we're looking for is basically on an uptrend, what kind of candle will confirm a reversal? And then on a downtrend, what kind of candle will confirm a reversal to the upside, right? So we use a lot of different factors in addition to candlesticks. So for example, this one here, we see the volume spiking up. This right here would have confirmed right there, the end of a downtrend. Here would have just been taking risk, right? So that's a lot of examples that I've been giving you already. What else can we go over, guys? I've been making this video series over the past few days, right? I've been making it over the past few days because there's just a lot of information to go through, and I don't think I've even touched the surface of it because I just wanted to give you guys a really good idea of how I look at candles and incorporate it into my daily trading, right? So I use candlestick formation very often, guys, to look for pattern recognition and to get market psychology. And market psychology is really important to understand, right? It's not just looking at charts. We have to combine market psychology with volume, with liquidity as well. And the candles, they tell a beautiful story. So this candle right here, for example, on a downtrend, right? It would have made me enter a position, honestly. It would have made me enter a long position because I saw a Dragonfly Doji form, and I thought, I would think to me that that's a very powerful candle. Okay, I would have at least tried to shoot. We're not going to go into how to set targets yet, but we're just going to go to targets based on the previous highs, okay? And then I would have set a stop loss, say right here, just to get lower than there, and I would have had a risk to reward ratio of 2, I could have had a chance to win 30%. I could have had a chance to lose 15%. And surely enough, it pays off, right? It actually just basically got to the top over there. And what else? Okay, this is a good hammer candle right here on a downtrend, right? We see this hammer candle. The bears attempt to push it to the bottom, but they got rejected pretty hard, and then they pushed it all the way back up, creating a hammer. What else? Right here, guys, this is a gray candle as well on a downtrend. This is basically another hammer candle right here, okay? So they're being pushed down, pushed down, pushed down, and then the bears pushed it all the way down here. But by the end of the candle close, the bulls pushed it all the way back up. So I would have entered a trade right there. If you guys are not familiar with this tool that I'm using yet, trust me, we're going to go over it in great, like ridiculous detail, guys. You guys have no idea how much detail we're going to get into. And this is only my first of my video series, right? So I apologize if it was a little bit not that enthusiastic or not that good, but I'm definitely trying my best to get information. And I promise you guys, over time, I'm going to get a lot better at conveying my message to you. So for example, here, you would have shot for this target right here, this dragonfly doji farm or hammer, whatever you want to call it, set a stop loss slightly lower than right here. So you have a chance to lose 8%, but you have a chance to lose to gain 18%, okay? Now let's think of this for a moment, okay? A risk to reward ratio of 2 to 1. What does that mean, guys? What does that mean? Let's say we're flipping a coin, heads or tails, okay? Heads or tails. And you're playing 10 games, right? And you're flipping $1 each time, right? You're flipping a loonie each time. I guess it doesn't matter. Flipping a loonie, sure. Or, you know, a $1 coin, okay? And let's say every time you win, your buddy says to you, hey, if you win, you make the call right, I'm going to give you $1, okay? But every time you lose, you owe me 50 cents, okay? So this risk to reward ratio is obviously $1 to 0.5, right? 50 cents. Which is the same thing as saying 2 to 1, right? Does that make sense? $1 to 0.5 is the same thing as saying $2 and $1, right? 2 to 1, right? So now let's say out of 10 games total, you win 5 and you lose 5 games, okay? Now, if you win 5 games, how much does that equal if you're winning $1 each time? So you'd be winning $5 total, right? But if you lost 5 games as well, okay? If you lost 5 games and you lost 50 cents each time, how much do you lose total? If you guys answer 250, right? You got it right. So what is your net profit? Right? Your net profit is equal to $5 minus 250 is equal to 250, right? That's what risk to reward means. So let's say you guys had the same winning percentage every time, or the same potential gain every time of 17% here, okay? And you had the same loss of, you know, half of it, which is the same thing as saying your win of $1 and your loss of $1. Well, if you play 10 games total, just based on simple probability over 10 games, you would actually be up $2.50, right, guys? Does that make sense? So that's how we use risk to reward ratio to calculate our win probability and our win expectancy over time. So over time, you are absolutely going to win if you keep making trades at a 2 to 1 ratio, okay? And there was, say, a 50-50 chance and you were getting it right most of the time, right? So basically, even if you lost, let's say 7 games, right? But even if you won only 6, if you won, heck, 4 games, okay? And you lost 7 games, or you lost 6 games, okay? Well, if you won only 4 games, you'd be gaining $4, but if you lost 6 games, you'd be losing $3, right? So now we're taking 4 minus 3, that still equals $1, okay? Basically, that's a win rate of 4 out of 10 games equals 40%. So even if you were 40% win rate with this 2 to 1 ratio, you'd still be making, for example, $1 every 10 trades. But let's say you round it up, you know, you're winning now $100 and you're losing more than that, you're losing $50, right? The same ratio still applies, just add 2 more zeros to it. So your net profit over 10 games would be $100. So this is the kind of tool that I'm using quite often to teach people what risk to reward is. And that's important to understand as a trader, because we don't try to make one big win at a time, or, you know, win every single one. What we try to do is keep the game like mathematics, like probability, and we will win it absolutely over time as we stick to specific strategies. So if you guys have any questions about my candlestick formation video, please reach out to me on Twitter, guys. I don't really respond to everything on YouTube, but make sure that you guys reach out to me on Twitter, and I'll be more than happy to answer all of your questions. And you guys know the drill. Subscribe to me on YouTube, blah, 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 blah. Follow me on Twitter. I try to help out the community as best as I can. And I've also set up a little donation box for my dog that you guys have seen in my previous videos. You know what? I'll never make any video content, guys, where I'm going to charge you for shit. And basically in a lot of other videos, right, that people post, they're trying to market something to you from what I said, and the quality and the content is very limited. They want to sell you some buy signals. They want to get you to pay for some subscription every month so you can join their chat room, right? But what I'm trying to do is teach you guys how to be an independent trader, okay? I want you guys to learn how to think for yourselves. I want you guys to be able to make these rational calls, and I'm trying to walk you through it yourselves. You know, it's basically the same concept. I'm trying to teach a man how to fish, right? So I will never create any content, guys, where you will have to pay for it, I promise. And I promise you guys that the quality of work that I put into these videos, they will be on par with a professional trader. Why will they be? Because I do this full time, but I do it pretty damn well, I have to admit. And that's not me being cocky or arrogant. It's just me being able to say, hey, I get to day trade for a living, and I'm doing pretty well, you know, like I'm sustaining myself financially, more than financially, we'll say, right? And I don't need your guys' money, put it that way, okay? So I will never create content once again, but at the same time, right? I'm always going to have a tip jar, guys. If you guys love my dog, send her a tiny little tip. It's going to be for her vet bills down the road just to show some appreciation, like how I appreciate you guys. So thank you very, very much so for all the love and support you've given me. And I hope to answer all the questions that you've given or that you're posting. And reach out to me if you guys have any questions or concerns, because I'm incredibly approachable. So have yourselves a great day, guys, and have yourself a great week.